Hi, I'm Mike Helveston with Whitford Financial Planning, and today we're going to discuss the big retirement pension decision. Should you choose a lump sum or monthly annuity payments? So, if you're fortunate enough to have this decision in front of you, you may be seeing some obvious reason to take each of these options. Maybe you want to take the cash now while it's available and invest it in an IRA. Or maybe the idea of guaranteed income for life sounds even better. So here are the factors to consider. First is your age and health. Pension benefits are generally calculated based on a combination of years of service and final average salary. Also, life expectancy is used in determining lump sum amounts. Therefore, those with longevity in their genes and in good health may favor a monthly pension for life. In contrast, a lump sum could be attractive for someone in not as good a health because the whole remaining amount could be available and passed eventually on to beneficiaries. Secondly, you need to consider, if you're married, the resources of your spouse. So if you and your spouse would both have a pension potentially, or you don't have much saved in a 401k, you might not like the idea of having money to invest with a lump sum. However, if your spouse has no assets, it might be comforting to have a fixed pension income for the rest of both of your lives by electing a joint and survivor annuity option. Thirdly, you need to consider risk tolerance. Generally, I've observed that risk averse investors prefer a monthly annuity, and those with greater investing experience and risk tolerance may like the lump sum option. Another big factor is when you will need the money. For example, if you can take a lump sum 10 years or more before it's needed, this might be a good fit to allow more years for the money to grow. And then lastly, there's the factor of other income and taxes, and probably the most often underused or underanalyzed. And this is looking at your other sources of income and the rate of tax that you'll pay on the pension funds. So, would it make sense to take a monthly payment form of the annuity if you don't need the money to live on for another 10 years? If so, a pension would be stacked on top of your other income and wages and could end up costing you a bigger chunk in taxes to the IRS each year. So, if you have time before the money is needed to live on, a lump sum may work for you if this can then be rolled into an IRA. So it's important to carefully review the pros and cons of each pension option before making this important and usually irrevocable decision. At Woodford Financial Planning, we're here to help you make smart financial decisions, and we'd be happy to review your pension options with you specifically and come up with a plan. You can learn more by visiting our website at whitfordfpe.com, and we'd be happy to help you out.